Happy Tuesday. How's it going today? Hope you're having a good day out there. This is the Closing Beat, just a fun show that we do every day. It's a stock market update that we give to our clients here to give you guys updated on things, but also to those of you that like to watch as well. We'll cover the stock markets, the good, the bad, and the ugly, maybe some stats and interesting things along the way. We'll hope you keep us in mind at Jazz Wealth. We're investment advisors, and we manage our own portfolios on there. So a lot of times the stocks that we're talking about are stocks that are in our portfolios. And I hope you'll check it out on the website there. If you have long-term investment accounts, Roth IRAs, and you're just not getting any help wherever you're at, and you want that kind of personal financial advice, not only with your investments, but also your personal finances as well. Hope you'll check us out. We also have a class coming up on Thursday. Every Thursday we do a class for customers, and they range in topics. You can go on our website and see the different classes that we have coming up. But this class will be on options, part one. We're going to go over options. What in the world are they? How do they work? I'm going to give you like the world's simplest explanation. You'd just grab a pen and piece of paper. You'll be so amazed how simple we can make something so complicated. So looking forward to that. And that'll be live in the dojo. If you're not familiar with the dojo, if you go to the website there, every one of our customers gets access to what we call the dojo. For now, we got video library in here. You can sort by all the different classes we've done privately for customers in the past. You can also kind of go in there and say, well, I don't know about options, man. Tell me the basics. Help me with my personal finances, 401ks, and things like that. How investments work and everything. We got you covered in there, all the way to the geeky stuff, which would be like the detailed studies and things that we do. Our most recent one was the weekly versus monthly deposits, breaking it down, going back 30 years, every single tick of the market to show you that data in there. So that's free for all of our customers. We like to teach here at Jazz Wealth. It's one of the things that we sort of aspire to do, is teach you how to be better, tighter with your personal finances, as I always say, to keep your dough straight. And we're also playing a game. It's called Guess the Dow. Go to jazzwealth.com/guess the Dow. Tell me where you think the Dow is going to close next week. If you're the closest without going over, we'll send you a $100 gift card. Our winner last week was Art, and that gift card is out in the mail. I saw it today. It's on the way, Art. So congratulations on that one. Let's go over the stock market, because that's really what we're here to do. Now that part's out of the way, you got the Dow higher by 31 points today, the S&P lower by 3, and the NASDAQ higher by 1. What's with that? Why the split? Remember, when things don't look like they're moving together, you always want to ask that question. What's going on there? If we take a look at the S&P 500, well, we've had a good run. We've been sitting here at new highs. Today, the market pulled back just a little bit. The S&P pulled back a little bit. Largely thanks to real estate and utilities moving a little bit lower, and that's because of interest rates moving higher a little bit. So that hurt the S&P 500. If you look at the Dow, you got a couple point gain there. Well, 31-point gain on the Dow. That makes it hits a new record for the Dow. That was largely helped by Boeing, so that's the reason for the difference today. Boeing was a stronger mover in the Dow. You got 2% gains on the day. Basically, the CEO said he was going to forego his bonus thanks to the 737 MAX mess. And also the chairman of the board said he thought the CEO was doing a good job. And there's been questions about, hey, were they going to get rid of the CEO and put somebody else in there? The chairman basically said, nobody else wants that job. We're going to let this guy who's doing a good job, we're going to let him kind of get through this chaos, this little crisis that we're going through, and he can make that, hopefully make the best decisions there. And the NASDAQ sitting up there at highs a little bit, but pulled back today, well, just basically flat. Let's just call it flat. All at highs here, and basically, as we've talked about, if you see the markets have a good move like this, inevitably you're going to hear people say, maybe we pull back a little bit, right? It's normal. So I think everybody's pretty much prepared for that. If the markets pull back, I don't think anybody would really mind in there. Other news that's come out today, you had China come out and say, hey, you know those tariffs that you put on us in September? If you want us to sign phase 1 of this deal and you want everything to go smoothly, we're just kindly asking that you take those tariffs off the table, and we can talk about the rest later. So a little bit of negotiating going on there. Remember yesterday, Wilbur Ross said, we're going to sign the deal. This is going to happen this month. So maybe we'll see what happens there. A little bit of back and forth, at least coming up to the deadline there. So that's what's going on with China. That came out in the China Post overnight. I believe it was the China Post overnight there. You also had the 3 Fed presidents. We talked about that yesterday. You got Fed presidents out there just talking, Fed members speaking. They all basically said the exact same thing today. Really, really interesting how they all included in their speeches and comments that they don't see a reason for further rate cuts. They do this. This is intentional. I've walked you through this in the past. They go and they sort of set the tone for the next meeting during all of this talk. So the 3 presidents that came out today, they said no more rate cuts. you see how they do this, right? You see the game that they're playing there, and it's fair. I mean, it's totally fair. Also, stick around here at the end if you have a moment. I'm going to share some presidential election data that brought to you by Goldman Sachs. They send out notes to their customers. We happen to get all of those sort of newsletters and things that go to high net worth customers. So I'm going to share a chart with you today so you can see how the markets perform going back, looking through all the elections. They put out a great chart there. I want to share it with you in addition to some of the stats. Let's go over to the individual sectors for the day. You got 3 straight days higher for the financials. I'll use the XLF to track it, right? Good 3-day move up there, a little extended in the short term. Look what happens. When financials get extended, they like to pull back. It's not an immediate thing. It's not a crash. It's not a collapse. They just, when they get a little ahead of themselves, they like to take a break, even if only just a small break there. So a lot of people looking at financials saying, wow, there's a lot of them that have hit new 52-week highs. The financials clearly are starting to participate and have been participating, but it'd be totally normal if they pulled back. And you can see a little bit of that hesitation from the bulls today as we took off early in the morning, people saying, I don't know, should I buy this? This seems awfully weird. Maybe I shouldn't buy these highs. And so you got a little bit of a pullback there. Not a big deal. Semiconductors, same thing. They hit new highs today, but you can feel that tentativeness. You can see it on the charts there. That's 3 days higher. Very normal for this to take a break from here if it chooses to. A little far from the moving averages there. And so 3 days higher on that. Totally normal. We'll see what happens. Oil recovered again today. Yesterday, it hit the 200-day moving average, started to pull back. We said, oh, not a big deal. Starting to see that momentum shift back into energy and oil areas. Basically, it made it back to the 200-day today. That puts you up by 1.3% on the day, and it took a lot of those areas with it. Right? You got the XOP moving higher. We've been talking about that shift in sort of bias over towards these energy stocks and the oil explorers. You had the same thing here with energy. Just another day up, right? Just people coming over to that area saying, all right, well, I see the momentum there. Better participate a little bit. So you have that. I think the OIH was negative on the day. Yeah, down a little bit on the day. Not a big deal there after it's had a pretty good run. Let's go over to interest rates. Interest rates keep moving higher, whether you're looking short-term or long-term. Basically, the price of bonds moving lower. If you're not familiar, it means rates are moving higher. So it's an inverse chart that we're looking at. I didn't say it that way. As prices move lower, rates are moving higher. So when I point out prices moving lower, you know the interest rates are moving higher is what I was trying to say there. So another down day here for notes. That's your short-term. If we go, oh, sorry, where did I go here? Oh, there it is. If we look at bonds, a 30-year, also moving lower, rates moving higher as well. It's all on trade expectations. Everybody's pretty happy there, so you got rates moving a little bit higher. Well, that's going to hurt your REITs. So no matter what ETF you look at, you see those REITs officially breaking their uptrend here and really kind of selling off aggressively. That's people moving money out of that area saying, okay, I guess it's done. I'll move money over to energy. I'll move money over to financials, retail, which has done a little bit, done pretty good here in the short term there. So those areas hurt. Also utilities breaking through the 50-day officially. And so starting a little bit of a pullback there, all on higher rates. Those are interest rate sensitive areas there. You've got transports. IYT is one way to look at them, breaking to new highs. This was one of those areas that we were talking about hadn't yet to broken out, right? So they're finally breaking out there, although the problem is they're already up 3 days. So you see the theme that we're building here. Lots of areas of the market are already up 3 days, have had a good run. It's going to be really hard to attract more buyers here unless there's some amazing catalyst that just forces you into the market. Everybody and their mother's looking at the market going, all right, pull back a little bit and I'll go ahead and play along there. So that's what you have there. And then I mentioned retail. Pretty good there. 3 days up on retail, back above the 200-day moving average. Looking pretty good there. That's been a tough area lately, so that's starting to do a little bit better. What else do we want to share with you? Notice that over the last 2 days, volatility has crept up a little bit. I'll use the VXX to illustrate that. It's not the cleanest way to look at it here, but yesterday, markets were higher, volatility was higher. Wait a minute, that's interesting. Today, markets were basically flat, slightly higher, volatility a little bit higher. Oh, that's interesting there. What is that? That's people saying, I'm not sure of this market up here at highs, like to protect a little bit, put on a hedge, or people that play this as a pure play, starting to look at those things as a way to play a bit of a pullback in the market. So volatility up 2% today as well, something to keep an eye on. Regional banks doing well. They've had a great run, though. Let's go like this for you. There you go. So regional banks breaking through this whole little sloppy downtrend that it was in, officially getting a lot of excitement there. You'd want to see the pullback just hold above it if you're a technical trader. That's just kind of a fun way to look at it. Let's move on to some stocks here. All right. Tapestry. So Tapestry broke out today out of this little range. It's been quiet there. They had earnings come out. Did all right. Store sales stronger than were expected, and that seemed to be the focus today. So up 1.62%, coming up off their lows. We covered them last earnings cycle to kind of go over what's going on there. What are they trying to implement? Did a great video on that one to cover Tapestry. It's on our YouTube channel if you want to check it out there. Other news, you got Adobe a little higher on the day, got about 4.25% gain moving out of this downtrend here. Turning the corner, they gave some guidance there at one of their, Adobe Max is a conference that they have. That was coming out there. They raised their full year guidance going forward. What a cool company. Just a really cool company. I was talking about that with one of our developers here, and the products that they offer, I mean, who competes with them? Like, where can you go get something similar to what they have? Very interesting. And of course, their transition over to cloud-based subscription models has gone really well. So the fact that they raised their guidance for next year, obviously important. They also said they're not going to be buying many companies next year. Frees up some cash. Maybe they can pay their shareholders. We'll see what happens. You might have noticed Peloton today. Peloton, there's the ticker. Down 7.6% on the day. Look, it continues to be these companies that have the approach of grow as fast as possible and worry about profits later, they're getting more and more attention, right? A lot of people are saying, listen, the economy may be in an exhaustive phase, and if that's the case and you guys aren't yet making a profit, what's going to happen if you never get there? And so Peloton basically says, hey, the CEO said, we're within striking distance of profitability. That was his words, not mine, the CEO's there. We talked about what you would look for in their earnings that they needed to beat. Subscriber growth. They were at 511,000. They came in at 562 subscribers. They were expected at 544, so they beat there. It wasn't all bad news. The issue is profitability. People are looking at these companies, these IPOs that came out this year, and like Uber and things like that, and saying, what am I investing in? You're not making a profit. You're making it very, very difficult to want to hang on to these stocks unless there's some clear sign of profitability. So speaking of Uber, let's look at Uber. Down to new lows today. That broke officially to new lows and closed at new lows. The CEO, like we talked about yesterday, he says we're shooting to be profitable in 2021. Remember, Lyft said the same thing. They had earnings last week, and the founders of Lyft said the same exact thing. They're shooting for 2021. So Uber kind of had to say that, and I think a lot of people were kind of thinking, well, explain how. Gross bookings were down. You guys have a ton of losses. So people deciding maybe they'll just hang out and wait to see if they really get closer to profitability. So that's Uber. Sticking with that same theme there, Shake Shack, lower by 20% on the day. This is also one of those hyper-growth kind of companies. Prior to today, if you just for fun, went back and looked here, yesterday when the stock was trading around 84. That put it at 126 times trailing 12 months earnings. 126 times. Do you know how rich I would be if I could value Jazz Wealth at 126 times trailing earnings? Anybody for that matter. Imagine you started a business and your only goal was to just get it to make $100,000 a year. And then you could charge a multiple of 126 times. That'd be $12.6 million. You know, they get away with some valuations here in some of these stocks. Anyways, you have to be operating at peak perfection, right? If you're going to justify that type of valuation. I mean, that's beyond tech company valuations there. Anyways, revenue was good, up 31%. Sales were good, but a little bit under expectations. Came in at 2%, if we're talking on a store basis. Came in at 2% versus 2.5% there. Their gross margins took a bit of a hit on an individual store basis. Higher labor costs, higher food costs. All of a sudden, you're like, whoa, are you worth 126 times trailing earnings if you're kind of maybe having some issues there? So that stock absolutely clobbered today. I think it's okay in the long run, though. I mean, it's just a little overvalued. Kroger, great move today for Kroger, about 11% on the day there. They raised their 2020 guidance as well. The CEO says, we have regained our sales momentum. There's been a lot of question out there about Amazon and Target and everybody, Walmart stealing the grocery sort of area of the business. And Kroger says, we got this covered. We're raising our guidance and everything. We're looking good, up 11%, all based on that guy's CEO's one comment there. Beyond Meat's small gain on the day, up 2%, still sitting near lows there. They were upgraded at Bernstein. Lady upgraded them there. $106 target she has. You can see where that's at. That puts her up here. Not bad, I guess, if you're looking for a little bit of a bounce. She's got a 53% success rate average, plus 2% gain if you follow her calls there. The best analyst, and also the average, by the way, is at $115 still. So the average expectation is right here over the next 12 months, 115 bucks. The best analyst also happens to be right there at the average, if that helps you as well. A couple other things in stock news, and we'll move on. Hasbro, a little bit lower on the day. Hasbro is doing an $875 million secondary offering. This is not really new news, but that is coming up, so the stock a little bit lower. Hertz, there you go. Hertz had a good day today, 14% higher on the day. They beat on earnings by 10 cents. Revenues were basically as expected. They didn't have as bleak of an outlook as Avis budget did. So stock a little bit higher. Marriott happens to be a stock that we own here. Almost 3% higher on the day. Looking good there. They did miss on earnings by 3 cents. Revenues were better than expected. This is the largest hotel operator in the world. And so they doing well overall. Bookings not too bad. Just all right. It's pretty good earnings. Besides missing on earnings there, all in all, not too bad as far as Marriott goes. I'll point out Regeneron. I don't really like looking at these. Regeneron down up 7% on the day. They beat on earnings by 27 cents. Revenues came in better than expected. Not enough to get over the 200-day moving average, but to be fair, that's a little bit extended in the short term. Might need to take a bit of a breather there before busting higher, if it does bust higher for you. So those are some of the stocks in the news for the day. You have 67.3% of the S&P above the 50-day moving average, pretty much holding tight in the upper 60s there, so not much to report there. 56 new 52-week highs today. However, if you go through that list and you look at them, yeah, 7 sectors in there, all is good, but you're feeling that tentative buying power out there, right? Like people just aren't super excited to go diving in and start buying a whole bunch of stocks in there. So a couple names on the list that you can actually see the hesitation. Apple sitting at highs. It did make new highs, but didn't finish higher on the day. Even the strong ones, your Philip 66 there, the really, really strong one. In the oil space, hit new highs, but really wasn't able to convince people to continue. If you look at some of the banks, you got Citigroup, hit new 52-week highs today, but nobody wanted to drive the price higher. There wasn't a big influx of buyers there. Same with JP Morgan, if you happen to be looking over there. And UPS hit highs as well, but did start to retreat. Again, the moral of the story today is a lot of these stocks have had good moves in the ultra short term, and totally normal if some of these want to pull back. So that's that. As for our stats plays here, you got Centene was supposed to fall by 1.45%. It did that yesterday. We could take this off the list. That's sort of old news. That one is done there, so you're going to need a new one. I like tracking these, following along. Gives us something fun to look at each day. Now, here's the next one, FTNT. There you go. So stock a little bit extended here in a short term. 51% of the time, it is lower by 1.53% over the next 5 days. So we'll see how that goes. 1.53% from today's close puts you about 90.23. So I'm just going to draw a line as close as I can there. That's what we'll be looking for over the next 5 days. We'll see what happens. Keep in mind that these stats plays, they're not very exciting. I usually do a lot more of them. I like to kind of follow up with them and see how things shake out with you guys. But smaller moves. You notice how they're all like 1%, somewhere right in there. It's all smaller moves because volatility is so super low right now. It's just hard to find any real meat there in terms of stocks that you expect bigger moves. So we're still kind of dealing with that. So just keep that in mind. It's just fun to track. I'm not suggesting anybody short the stock or do anything there. Just fun to track. A couple other things. You got Walgreens, Boots Alliance. The stock was higher today. How much did they gain today? 2%? 2.62% on the day. Apparently considering, the rumor is they're considering taking the company private. That would be the largest leveraged buyout, I believe, in history. I can't think of any other one, at least certainly in the last 10 years that I can think of. So that's why that stock was higher on the day. If you happen to be looking at Under Armour, it did recover a little bit from yesterday's collapse on earnings there. Just sort of a dead cat bounce, up 5.3% on the day. And yeah, so that's what we have there. Okay, Paul Tudor Jones and a number of other sort of hedge fund wealthy individuals there, sort of bashing on Elizabeth Warren. It seems like a concentrated effort there. Paul Tudor Jones says the S&P will fall 27+% if Elizabeth Warren wins the presidential election. Well, Goldman Sachs just happens to be out with a very interesting study. I'm going to try to share the chart with you. Let me see what I can do. Can I make it bigger? This is sort of last second here. I just like, actually, I'm not even sure if I'll get in trouble for sharing this, but maybe if I credit them. Goldman Sachs, right? It says there at the bottom. This Goldman Sachs is not our data here. So there's currently a 74% probability that Democrats control the House, 54% that they win the presidency. Only a 35% chance that they control the Senate. If you look at this, but basically what they're saying is, either way, whoever wins, you end up with a divided government again, at least the way the stats are at the moment. If I zoom, let me see if I can make this bigger. If we look at the returns that wrap around U.S. presidential elections, what you're seeing here on the y-axis is the market's performance, positive or negative, the S&P 500. What you're seeing on the x-axis here is a countdown to the days of election in terms of months. 24 months from election, 21, 18, and so on and so on. 0 naturally is election day, and then they go 1 year forward so you can see how the markets perform. Now, if you look at the average, that's your blue dashed line there. It's looking back over 21 different elections to show the markets tend to drift higher during elections. Doesn't mean they can't be volatile. It doesn't mean they certainly can't be very exciting, but that's what you have in terms of an average. If you take the lower 20th percentile of performance over the last 21 elections, you still end up with a positive gain 1 year after the overall election. It does tend to get a little bit choppy there leading into it. If you take the top performing markets, the top 80th percentile there, both before and 1 year after the election, you see the stock market, it does quite well there. Average looks to be around 15% 1 year after the presidential elections take place. The green is currently where the stock market is at, going back 24 months to where we're at now. We've got 12 months until almost 12 months until we do the next election there. So kind of an interesting thing that they're sharing there is that bottom line is markets trend higher into elections, even though you can expect and usually do see some pretty good volatility depending on who is in control or at least leading the way there. So we're going to expand on this with our class that we do next week for customers where we do our portfolio update. We're going to go through all kinds of interesting election data because I thought this was interesting, which caused us to look up some stuff. And so now we're going to start putting some things together so we can share that with you guys in our portfolio update. That is a class that we do once a month for customers to cover the portfolios, changes that we made, go over the stock market, a lot of the stats, both historical and forward-looking. I like to share that with customers, and it seems that they like it as well. So hopefully that's good for you there. Before I take your questions, tomorrow we've got Cody reporting earnings, expecting 6 cents a share, CVS, Humana, Baidu, be an interesting one, Expedia.com, Fox, QCOM, and U-Haul. U-Haul's coming in the mix there as well. So we'll see what happens with them. All right, questions there. Thoughts on, also Intel paying out 32 cents in dividends. We happen to own that one, so good there. Thoughts on Disney moving into earnings season soon? Hey, I like Disney. I mean, there's nothing not to like about what they're doing. I'm sort of biased, right? I'm sort of excited about Tron at the new Magic Kingdom there. I'm excited about everything they're doing at all the theme parks there. They sort of alert Florida residents, if you like, as to what's closing, what won't be there if you decide to come over for the day. So lots of work being done there. Stock-wise, obviously, they've got a lot to look forward to with the Disney Plus. Even if that's a moderate success in the beginning there, I think people are already starting to price that into the stock. But, yeah, I'm looking pretty good. Billionaires bashing Warren will only help the fight as establishment candidate. Yeah, the only part I don't like about that, and I get it, some people think billionaires are bad guys and some people look up to them. I happen to think you should look up to them and see how they got there and learn from them. I don't like when presidential candidates try to bash on one thing or the other. Like, just because you make money doesn't mean you're a bad guy, right? I also don't like when they sort of try to make the lower class feel like they, deserve something and all. I don't like when that happens. I just like hey, what are you going to do to help the country and help the economy? More importantly, help our dough. That's what I'm focused on. So I don't really care for how people bash on the billionaires because there used to be a time in life where you would look up to them. You would try to learn from them and things. And I don't like that part of things. But that's just me. I'm not taking sides, just where I'm at. Manfred, I'm guessing you asked some questions on there. Anyone think $43.70 a year for retirement for someone after tax when 22 years old? I'm not sure what you're saying there, but inflation is... So we do that for every one of our customers. We actually walk them through. What do you want to shoot for? Here's what it's going to take. We go through the whole thing with them. And so if that's what you're asking, I'm happy to help, but Sounds like you've done some calculations there. That's better than most people, I'll tell you that. Most people don't bother there. Is Tailored Brands a good discount? Decent in the long term? They met 10 out of last earnings estimates. Yeah. So here, can we pull up a chart? Let me show you what that looks like. You're not going to like the way the chart looks if you happen to look at it there. This is a beaten down stock that you are. It's not that it's oversold. It's not that it's discounted. It's that it's beaten down. This is a really tough one. You're expecting them to really make a big comeback here in order to see a significant return. I think it's a tough one to try to dive into. If you own it, there's no reason, like you said, they're sort of turning the corner. There's no reason to really bail on it. But to dive in here as a brand new investment makes it a little bit tough. I get it. There's a lot of names like that right now. You said earlier, interest rates and capital shifting pulled REITs utilities back. As REITs utility investors, a way to gauge the end of a pullback, or is this knee-jerk reaction? Well, that makes it fun, right? If you're focused on that area and you say, look, I have my REIT category ETF, or I buy stocks or whatever in that category, and I like my utility stocks, I would say you're probably in no hurry to go diving into this. What's happened over the last couple of days doesn't mean it's bad for this category. It's just it's had a great run. It's been an amazing run up there. It's a lot of profit taking there. And given that the volume has been consistent, you get the feeling it's not done yet. There may be little bounces along the way, but you just get that feeling from here that the volume's been so consistent. Why would this snap back and go all the way back up to highs there? I think it'd be a real difficult one, especially with the Fed now saying everything looks good. We don't have to cut rates anymore. They're telling the REITs and the utility market the excitement's over, right? That's essentially what they're saying there. Until that message changes a little bit, yeah, it's kind of difficult. Yep. Oh, Tandra, he's going with the puts, going straight out. It's like let's get the market to fall. You basically are putting yourself in a bearish position, and you hopefully want the markets to fall. I'll cheer them lower with you, but there's no ifs, ands, or buts about your position there. You want the markets to fall, and you want volatility to scream higher. I see what you're doing. Yep. Is it a good time to start looking into inverse ETFs? I sort of have a little beef with those. High carrying costs that you don't see as a consumer there. You got to be very careful with the inverse ETFs. Those were initially and should still be only used for ultra short-term trading / investing, right? If you're spending more than a week or two in these things, that's probably even pushing it. There's just better ways to go about it. Cheaper ways, I should say, as well. So... Yep. Thoughts on NEO? Oh boy. Yeah, it had a good day today. I figured somebody would ask about that. Where'd we land here? 36% higher on the day. It's a little short covering. That's all it is. I mean, has anything changed with the business? Are they going to be profitable? Are they going to compete in any way? I don't see it. If you own it, I hope to be proven wrong so you can make some money, but that's tough. If the S&P pulls back, could you see the banking sector keep going? You're going to need those. You can't have a rally in the markets without the banks, right? You can have little spurts here and there. You just can't have a significant rally without the banks. You got the banks now, but in the short term, if they take a break, I think a lot of people are going to use that as a reloading opportunity or an opportunity to say, well, I missed it. Let me go ahead and try to dive back in a little bit. Yep. Oh, you're trying to save 20% of your income, Manfred. I like it, man. I think you said you were 22 or 23, something like that. Hey, that's better than most of the calls that I get to make on a daily basis, better than a lot of the emails I get from people. If you can do that and keep that consistent, you will not be disappointed. That's very impressive for a guy your age to do that. That doesn't happen very often. Oh, yeah. Yeah. Careful there on the reviews. The only sort of thing here is I can do this provided you guys don't leave anything that sounds like a testimonial. So as much as I would like to hear that you love us and you love this channel and you love everything, if you could shy away from the telling me how things are good or you love working with us or something, that actually gets us in trouble with the SEC. So help us out. If we get in trouble, we have to stop doing the videos there. It's tough. That's why I don't ever answer. If somebody says, I love your videos, thanks for doing them, I never answer that one. I'm not allowed to answer it. I will stay away from it. I'm not ignoring you. Certainly love that you guys are enjoying it, but it's just they're watching. You got to be careful. Cool. Sheesh, economic talk there, huh? There's going to be more and more of this as we go. Unfortunately, the voices on the Elizabeth Warren sort of side, Bernie Sanders and things, they make points that get people riled up and excited. The reason they're doing that is not because they really, really think they're going to achieve Medicare for all and make us all get taxed to death. I firmly believe that. The reason they're doing it is to build a base. That's it. Why do I do these videos every day? I'm trying to build a base of people that will follow and be engaged in everything, maybe become customers. Imagine a politician. They've got to build a base. So what they're doing is they're testing their marketing. They will all test different things. We've talked about this in the past. Remember, Elizabeth Warren and Bernie Sanders want to tax your Roth IRA as well. That's a plan that they actually put on paper, and they will try to pass to the tune of $5 for every 1,000. So just be careful what you wish for there. But bottom line is they're just testing their platform at the moment. I'll wait till we get closer to see where people really stand. Yep. Yeah, I'm doing a great job there. Yeah. Oh, yeah. I love it. No, keep saving. So in that case, look, I'm happy to work with you if you want to work with us. Remember, we do more than just investing. I'm going to teach you and help with every last aspect of your dough, but you're already on track. I mean, to me, focus on that. Prove to yourself you can do it for a while. That money will add up so fast. You enjoy that, and it sounds like you're engaged. If you're here, you're engaged in investments and things like that. I think people like that should probably enjoy doing what you're doing. I wouldn't want to take that away from you. You really do 20% at that age. You're in the 90th percentile. I'm just telling you, people don't do that. So at your age, knock it out, man. Go to town. Yep. Walter, 5% into the TSP, 5% match. Nice. 15% in the Roth TSP, maxing out outside the Roth 52, retiring at 68. Thoughts? I don't know what to say there. I don't know how much you've saved or where you're going with it, how much you're going to need when you retire at 68, how much 5% actually is. So I would do some math there. I'd take a look and see, all right, I'm putting 5% away, getting a 5% match. What do I end up with? How much can I spend when I retire? And is that enough? Do I just like we do in the videos, is that enough to make you through the rest of your life? And so it's all good. Yep. Yeah, Chris, I could agree with that. There's always going to be people that aspire to do better with their finances, and then there are going to be people that, unfortunately, they just spend every dollar they make. You see it. I mean, it's part of the deal there. Sometimes they flip the switch and come around and want to save some money, and, you can't push people when they're not ready. So it's understandable. I have family members that they just can't get their dough straight. I mean, hello, I'm here, and they just can't seem to make it happen. So it's like a diet, right? When you're ready, you'll get on the diet, you'll make it happen, and you'll have a good time doing it. That's the nicest way I can say it. That's all. I could have went down a whole different path there, but nicest way I can say it, and I'll leave it at that. I thank you so much for watching. It takes a lot of work for us to put these together every day, so I appreciate you hitting the subscribe button and all the support you give us. I do. I really appreciate it there, and I will wish you a great rest of your day. We will see you tomorrow to do this all over again, and enjoy. See you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.